we're going to wrap up the trifecta of retail earnings this morning with Kohls. That's what we're going to do, and I hope you're quite excited for this one. The stock's down 1.5% after reporting earnings this morning. Again, this chart's yesterday's chart, but pre-market. It just jumped pre-market down to only never mind, I lied to you. But pre-market down 1.5%. Let's look at these earnings. Obviously, I expected some bad stuff. There's no doubt. Clothing hasn't fully recovered yet, and Kohls definitely going to hit a little bit of a bump in the road. I will say, it's incredible stuff. Quarter 3 non-GAAP EPS of 1 cent, beats by 44 cents, and a GAAP EPS of negative 8 cents, beats by 39 cents. I think that's a really good number for them. I think that profitability number is one that they should really, really be proud of, because frankly they should be getting hammered right now, and they kind of are. Their business is still getting schmammered, and to be very close to GAAP profitability is pretty nice. The non-GAAP profitability obviously beneficial for them, no doubt, because they need positive cash flow for sure. Revenue of $3.98 billion, decreased 14% year over year, but is a beat by $90 million. Not a major beat in terms of revenue, but I still think that's good numbers. I think that's good for them. I thought it would be a little bit even closer to 20% down year over year, if we're being honest. So, in my perspective, they beat my estimations, and I like that. Comp store sales decreased 13.3 versus a consensus of 11.7. I think that's where some of the issue is. But seeing a revenue hike is pretty nice to me. From Michelle Gass herself, we entered the holiday season well positioned and prepared to serve our customers with more omni-channel conveniences in place to deliver the great experience that they always expect from Kohls. As we look ahead, we are incredibly focused on executing against our new strategic framework, which represents our greatest opportunity to drive long-term sales and profit growth and create shareholder value in the coming years. In addition, through disciplinary capital management, we will plan to reinstate the dividend during the first half of that's credible stuff. First half of 2021, they plan to reinitiate the dividend. That's really big. And I think as a result, which I'm surprised the stock isn't up, but I guarantee you those value investors, which is why the stock's down 55% on the year, obviously because sales part of it, but the value investors went away because they completely suspended the dividend. Those value investors are going to come back because they want that dividend probably. Now, what the levels that they reinstated at, I don't know. Is it going to be the same as it was? I highly doubt it, but I'm still excited for that. I think Q4 is going to be a really big quarter for Kohls, and I think they're finally going to see a positive revenue growth in Q4. And I think that's why they're already making this announcement, because I think they can see the writings on the wall, which would be pretty good. Yeah, absolutely, really good stuff. So, looking a little more finer detail. Obviously, we saw comp sales. Digital sales grew 25%. I'd like to see a little bit higher because I think that would really compensate for a lot of this. I think they should have gotten ahead in comps in e-commerce sales because it benefits them long term. When you look at other retailers, obviously how they're dominating in e-commerce right now. And Kohls, they want to be one of those that dominates in the clothing sector of e-commerce. They really need to do that. And I think they need better website management and better really advertising for the most part, in my perspective. I think that'll be a big benefit for them. And so, on top of that, obviously, gross margin slipped to 35.8 due to an increase in promotional activity mix and higher cost of shipping. So they're putting e-commerce as part of that reason. I get that. Merchandise inventory decreased 26% to $3.6 billion. I don't know if that's just they're not buying potentially, or they're not producing. I don't know what that necessarily good meeting for them. In my perspective, I'm assuming they're not buying quite yet because they're not expecting the sales to be, ridiculous. Strengthen its financial position. Fully repaying the revolver, ending with $1.9 billion in cash. So that goes that little debt source, which I'm excited about. We'll look at the balance sheet. Reinitiate the dividend will be massive. Yeah, very, very good stuff. We do have a slides to look at, which we'll look at. Where's the men's fashion, huh? I mean, it's only women that shop at Kohls. That's not fair. I have purchased my work pants at Kohls before, and you will not disrespect me. It makes me feel like a woman. Oh, there they are. There's this guy with his, kind of looks like Russell Wilson, but like if Russell Wilson was an imposter. Yeah, I mean that seems about right to me, but I don't know why they have two separate of like the same slide. It's pretty weird. COVID-19 update. You think I care much about this? It just talks about extra spending. I don't care much about the extra spending. It irks me, okay? I know you're going to spend more on precautionary measures. I've already baked this into every single person's, report. I've baked it in. This lady on the bottom right, that's a big old mask for you. I mean, that mask is that mask huge to anyone else? That's a big old mask. It's huge. Key takeaways from Q3. Good stuff. Digital sales, really good. Managed expense and inventory. Yeah, I mean, good stuff. There's nothing here that I see that's really crazy. Adjusted EBITDA of $253 million. Strong operating cash flow. Pretty cool stuff. Operating income, obviously, kind of bummy. I mean, I can't lie. $22 million versus last year $204 million. Kind of bummy. Net income of a negative $12 million versus $123 million positive the year prior. It's a big decrease. You can't lie if you're looking at the GAAP net income. But to only lose $12 million this quarter, I'm not upset with it. I can't lie to you in the fact that I'm not upset because, I mean, I can't complain. The business has been hammered. I can't complain about that net income line, and I think that they'll obviously turn it to positive this next quarter. Yeah, I mean, I'm not upset with it. And you can see, obviously, margin increasing as we go along. So, it's a recovery in progress, and by Q4 they'll be up in the positive again. They'll be up in the green. I like to see that recovery. Balance sheet we're going to look at, okay? We'll look at the balance sheet. Quarter 4 outlook. They're well positioned to serve the customers, no doubt. Stores are ready for holiday season with additional health and safety measures. And they have a compelling holiday assortment, emphasizing active, home, cozy and comfort and toys. Yeah. Nothing super crazy, but obviously they're saying fantastic basis here. 65 million active customers, 30 million loyalty members, 29 million Kohls charge card holders. That's a lot of people holding Kohls charge card. If you're talking about 65 million active customers and half of them are using your in-store credit card, pretty big. 16 million use the app. 80% of Americans live within 15 miles of a Kohls store, means that's a lot of potential business. 1,162 convenience store locations, 600 million store visits, 24% digital sales penetration. They want to do a little more than that. They're already doing a good bit as far as the e-commerce is concerned, but 1.5 billion website visits per year. They need to boost that, is my perspective on the matter. Here they just talk about strategies as far as what they're doing. It doesn't really hurt me too much. Obviously, the fourth most important thing is going to be share repurchases for them. Obviously, they're focused more on the shareholder and other aspects. Loyalty from Kohls Cash again. everyone loves their Kohls cash. I don't care too much about these you know, business plans. I get it. I know how you're driving the business, right? I've known this. I've looked at this company for a long while, and I get that. It's just your basic mumbo jumbo from every single company. They say, this is what we're doing super well. You got to believe us. I get it, Kohls. I get it. I'm not upset with you. You want to lead in fashion. You want to lead in all this stuff, I get it. Let's look at the balance sheet, though. But the repetitive slides we skipped, that's right. They're the same every single quarter. And we skipped them. How's that make you feel? I don't know if you like that or not, but I did it. So here's a year-over-year comparison. Total current assets are at 5.9, really close to 6 billion, I should say, closer to 6 versus 5.8 year ago. So a little bit of an improvement there. Total assets of 15.4 versus 15.7 billion. Slight decrease. I'm afraid liabilities probably increases as well. Total current liabilities of 3.7, which is good because they paid off that revolver. 3.7 versus 4 billion. So that decreased actually, which is good. But other overall long-term debt saw an increase, 2.4 compared to 1.8. So total stockholder equity is sitting at 4.8. That compares to 5.3 of a year ago. And honestly, to go through a pandemic and to see a balance sheet not really that much affected, I'm kind of okay with it. I'm not at all upset with the fact that the balance sheet really didn't shrink that much. Stockholder equity only sank by around really $500 million, which is a lot of money, but they can easily make that up in the next year. I mean, easily. Going through, being one of the hardest hit industries, I'm okay with that balance sheet any day of the week. And I think it does support dividend, reinitiation. I think it does. So I think that's exciting stuff. If you know, Kohls is one I've been buying relatively heavy, under $20. Again, still, you need to mention, year to date, the stock's been absolutely hammered. It's still down 46% on the year. It's been hit really hard, and I think it deserves a little bit more respect, right? It's trading at a market cap of $4 billion. Yet this quarter alone, they've did $4 billion. I just don't think this is a stock that's fairly down. And I think once the dividend gets reinstated, I think investors are going to be buying into it. I really do. I think they're going to be a little bit more open to purchasing this stock. So I think you need to keep an eye out for Kohls. And in my opinion, I give Kohls a buy. I hope you like that from me. How do you like when I say that? I give Kohls a buy. Make you happy? I hope it does. That's all I got for you, though.